Welcome to Point Blank, hosted by John Wick, aka Zero Hedge, and myself, Panama Crypto. Today, our guest is Sam Bankman-Fried. He's an MIT graduate, a former full-time trader at James Street Capital. He's founder of Almeda Research, CEO at FTX, and advisor at Serum, among many other accolades. It's amazing to have you on Point Blank, Sam.
Yeah, thanks for having me.
So let's kick it off, John.
Okay, Sam. Well, I'm super excited to have somebody like you on our podcast. As I told you before the podcast, I can't imagine what your days must look like. So let's jump right to it, man. So everyone knows who you are. I mean, we've given you a little introduction here, but do you think you can start by telling me a little bit more about your background? I mean, let's go a little bit, further in. Like, how did you grow up and how did you get to where you are now?
Yeah. So I sort of didn't know what to do with my life for a while. Before and during college, and had some sort of like, I don't know, maybe I'll do physics or something. Thought it wasn't very well thought out. And so, I sort of like tried some stuff in college, and I guess a few things came together. One of which was just thinking about how I could have the most impact on the world, and basically ended up deciding that at least a pretty compelling path was figuring out where, what I could do, which would allow me to donate as much as I could. And then the other was I had some friends who had interned at Jane Street and liked it. And so, just decided to intern there after my junior year. And I really liked it. So I went back full time after I graduated, and, as a ETF trader there, and basically doing, quantitative modeling, real-time trading, OTC quoting, and market making, and sort of like a whole lot of other things in that general universe. It was a really fun job. It was rewarding. They're good to me there, and it's a really great way to grow and to learn how to trade. And so I think basically that was all. That was all pretty nice, and I just had a lot of fun there. After 3 years in 2017, sort of felt like it was time for me to try starting something. It's something I'd always wanted to do, and there are a lot of things I wanted to explore with my life, a lot of things I wanted to try doing. Basically that meant it was sort of now or never, and so I left, and after a little exploration, I sort of stumbled on CoinMarketCap and just looked at like Bitcoin prices across different exchanges. Like, holy shit, these are really different. And so sort of dove into crypto. Originally doing sort of arbitrage, and then more sort of general service quant trading, and then obviously starting up FTX later on.
Wow. So let me get this straight. So out of college, Almeda was your very first business ever?
It was, well, I worked at Jane Street for a few years, but Alameda was the first business that I started.
Wow, what luck.
Yeah, it was an amazing situation. It's sort of like, you look at a lot of the companies that sort of like jumped into crypto in 2017, it was a good time to jump into crypto.
Now, I got a question listening to what you just said. You said that you had some other ideas too. So let's just tell us, what was your other idea that you might have gone into that might have not have been Almeda and FTX? What were your other ideas there at James Street?
Yeah, so other things I was thinking about doing with my life. I thought about, and in fact briefly did work, directly for a charity. I thought about going into politics. I thought about, likely that would have looked something like, sort of campaign planning. And some journalism, sort of a pretty random smattering of things.
Broad spectrum.
What?
Broad spectrum, yeah.
Yeah. And I think sort of the thing that tied them together was thinking about what could I do that seems like a natural fit for, or at least plausibly a natural fit for me, that would have like really high upside. Like that I could sort of imagine being more than just good if it went very well, that I could imagine, really having large impact on the world. And that was sort of like the thought process that I was going through.
Wow, that's pretty amazing because you surely have had an impact, man. You're one of the people that I admire because
Oh, thank you.
obviously, many of us, most of us, never get to have that opportunity to have the type of impact that you have had on crypto here. Let me ask you this: I'm big and I ask everybody that I interview because myself, it was very pivotal for me to have mentors. So, do you have like a specific mentor that you think of from James Street that kind of got you off, or how did you kind of get your knowledge base? Was it from a bunch of the traders just rubbing elbow to elbow, or is there a certain mentor that you have in mind that?
Yeah, it's a really good question. And to some extent, the answer is that actually just a lot of people there were really good mentors to me, and I'm sort of really grateful for that. And there are a lot of people there who reached out, who taught me a lot, and gave me a chance to grow and to take responsibility for things. I outside of that though, there's I guess sort of one or two people in particular. I think that the sort of desk head that I was working for was a really exceptional person, and I mean a great trader, but also a great leader and mentor, and really set the tone for the whole desk, and everything else sort of followed from that to some extent.
Okay, really interesting. It's really fun to kind of see how you built up to this this level here. So let me ask you, let's get into Almeda real quick. So tell us a little bit about Almeda. I know it's an arbing fund. I know that our audience listening probably doesn't know as much about arbing. So maybe can you give us a little bit of insight to what that actually looks like, or what your day-to-day process might look like? I know arbing's gotten a lot harder than it used to be. So I can't imagine what you do. But if you can kind of give us just a little insight into what arbing is and what you do on a day-to-day basis.
Yeah. So it's I think basically it can take a lot of different forms, but really the way to think about it, if you take a step back and ask like, why do arbs exist? What do they mean? Is sort of, well, let's say that you log on to some exchange, right? I don't know, what's sort of like the last exchange that you used?
FTX.
Sure. So you go to FTX, right? And you decide that you're really into Litecoin. Like that's your thing, or feel free to suggest a different coin that you're actually excited about now, if you want.
You say Uni.
Uni.
Uni's got a lot of attention.
Cool. So you decide that you're a really big Uni bull. You really think that Uni is gonna go up a lot. And so you go, and also you're fantastically rich. You turn out to be like Warren Buffett's son, and whatever. I mean, you start buying. You start buying. You buy a lot. You bought like $1,000, 100,000, $1 million, 5 million, and what starts happening is that Uni starts going up, obviously, because you're buying it, but it particularly starts going up on FTX because that's where you're buying it.
Right.
And so it just starts going up and up and up, and everything else is going up 2/3 as much, and so that extra 1/3 is sort of a premium on FTX, and just blowing out. And you just keep buying because you actually think Uni's going to 3x, right? So like, you're like, yeah, sure, it's up 40%, up 30% on what other exchanges, whatever. This is where I trade, and I still think it's going to go up a lot more, right? So you keep buying, it keeps going up more on FTX than everywhere else, and sort of simultaneously, a few things are happening here. One of which is that you're starting to get liquidity constrained, right? Like you really want to buy all this Uni, and partially it's just like the world only has so much Uni. You can't buy $10 billion of it because that doesn't exist. But partially because maybe you're running out of liquidity on FTX, right? Like on Binance and Fobi, people still have Uni, but you've bought all the Uni on FTX already.
No more sellers.
Right. There's no more sellers left, and that's why it's starting to trade this bigger and bigger premium. And for exactly that same reason, there's an arbitrage, right? Which is all of a sudden Uni on FTX is trading way higher than Uni on any other exchange. And so the way that you do that arbitrage is you go in, you buy Uni on, whatever, you buy it on Coinbase, you send it to FTX and you sell it there. And so you have this sort of like arbitrage firm, which is doing that arbitrage, but at the same time, they're providing liquidity to you. Because like what you really need is more people to have offers on FTX for Uni. So you want to buy more, but there's none left. And this guy's sort of doing the service of like going and grabbing the Uni from Coinbase and putting it where you're trying to buy it so that there's more liquidity to you. And what this sort of shows is this like dualism between liquidity providing and arbitrage, where the more liquidity someone demands, the bigger an arbitrage there is. And then by doing that arbitrage, you're providing liquidity to them, and you're closing down that arbitrage at the same time. It's just this arbitrage firm is coming up, buying on Coinbase, selling on FTX, and the spread is coming in as they do this. And so providing liquidity also is sort of the same thing as doing arbitrage, which is the same thing as decreasing the remaining arbitrage left to do. And that's what sort of ties all of those together. And so then you can say, like, what does it mean to be an arbitrage firm? There's sort of two ways to think about it. One way is you look for mispricings, right? Look for any place where you can buy an asset in one place and sell it in another at a higher price, right? And then you go do that. But another way to think about it is you look where there's not enough liquidity, because that's where the arbitrageurs are going to show up. You look where there's a ton of buyers and you figure out how to source inventory and sell to them. Or you look where there's a ton of sellers and you go and you buy from them and you figure out how to offload it.
Okay. Wow. That was a really great explanation. Thank you for that. I can imagine listeners probably listening are thinking to themselves, should I get into arbing? So probably let them know that you probably need a big bankroll to do this, and probably the small arbing opportunities for little retailers are probably over. Am I correct? This wouldn't be something.
It's a lot harder than it used to be. So 2017, you see Bitstamp and Coinbase would trade 5% apart for a day. Jeez. And literally you could just buy a Bitcoin on Bitstamp and send it to Coinbase and sell it. And anyone could do that, sort of like this dead simple arbitrage. Things are getting way more complicated. And right now, typically when you see an arbitrage, what it means is Ripple's moved 5% in the last minute, but it's actually moved 5.1% on some exchanges and 4.9% on other exchanges. But they're going to catch up in 500 milliseconds. Right. So it's like you basically need automated trading systems with sophisticated data feeds and modeling that understand the relationship between all these futures and funding rates and expirations and other derivatives and spot markets and margin and tether and USD and USDC and yen and Korean won, and it's sort of like it's this more and more sophisticated and complex problem the smaller the spreads get, because then understanding the fair premium of a tether to a US dollar becomes sometimes the entire trade, right? Like if you don't understand that, right now, for instance, we see a tether as 7 basis points more expensive than a dollar. So it's worth, 1.0007. If you're not thinking about that premium, you're going to fuck up arbitrages right now. So, it gets it's gotten a lot harder, but that doesn't mean there's never an arb that you can find if you're not a very sophisticated firm. And I think what I'd say is let's say that you're just, you're sort of click trading, right? How would you find arbs? First of all, usually you should think there isn't much of one. But when there is one, usually it's going to be in places that are really blowing out, right? You're going to be looking at where is there just a fuck ton of liquidity demanded right now? And maybe it's just overwhelming all the liquidity providers. And so, on the day that, there's an arbitrage in Ripple between Coinbase and other exchanges yesterday, I think, because there's huge inflows all of a sudden for an hour period. And so, yeah, even as a retail trader, you could have cycled a little bit of Ripple through that. Other things, right? Funding rates are arbitrages. Whenever there's a positive funding rate on perpetuals, you could go buy Bitcoin. You could take your dollars, buy Bitcoin, use it as collateral to sell Bitcoin futures, collect the funding rate, and sort of that's basically
all right. That's the game.
And yeah, that's a thing that appears sometimes. Usually it's not huge. Usually you're making a few basis points a day. And that's sort of what's left, that's what's left are the things which are maybe or maybe not worth the capital being tied up to do it. But sometimes it's much more. And what's something just basically an arbitrage, which we saw recently in the last 4 months, which was really huge. There are some cool examples of this. And I think yield farming sort of fits, right? Some of these, some of them were wacky and hyperinflating and you might lose money, but some of them were not. Some of them basically you take USDC and TUSD and you put them in a pool together and you get paid to do it. And I mean, that's basically an arb, right? And what's going on there is wacky. It's sort of not the usual reason that there's this free money. What's really going on is that all these DeFi protocols want adoption. I don't know what that means, but they want it. They want to be the big thing. And why do they want it? So people buy their token, right? I mean, they sort of that. That's ultimately one of the goals here. But they didn't have that much adoption. So what can you do? You can pay people to use your service, right? You just look, I'll just pay you $1 to play around with my protocol, and then my numbers go up, my TVL goes up, my volume goes up, and then everyone thinks, oh wow, this is a really active protocol, let's go buy its token. And I sell that token for more money than I spent paying you to use my protocol. Sort of like how you close the chain there of how the protocol is making money on this. And you're sort of like helping them out, but also making money because they're paying you to pretend to be excited about their service by dropping yield. And so it's sort of like a weird trade, but it is sort of conceptually similar, right? There's a lot of demand for someone to pretend to be excited to use a protocol and pump its numbers, and not enough supply of people doing it, people on billions of dollars doing it. And so you could jump in and provide liquidity to that weird ass demand by staking your funds somewhere.
Okay. Wow. That's very interesting. Thank you so much for breaking that down. I'm sure a lot of users are going to play that over and over and listen to those examples of ARBs. I appreciate that. That's really cool.
Yeah.
So let's, I tell you what, let's start talking about FTX now. I mean, it's quickly become one of the leading exchanges, and you guys seem to offer just about everything that you want to do or trade. It's kind of seems like what you guys are heading for, a one-stop shop over there. Can you tell me a little bit more about the evolution of FTX? How did that come about? Who did you call about this idea, and how did it start?
Yeah, so it started basically, I mean, there's Alameda. Alameda is trading. Alameda is fucking frustrated with a lot of the derivatives exchanges. Like it was, I mean, everyone is still always frustrated with all the exchanges, but as pissed off as people get now, I think it's worth remembering how bad things were 2 years ago. And I don't know how much you guys were using derivatives exchanges 2 years ago. It was not a good state of the world.
I'm a derivative trader, so you're talking to the right person here. Yep.
Right, and it's just like there's so many things that are just like you look at them, you're like, Jesus, like, are you fucking kidding me? This is what I have to do. And just everything from like the clawbacks. Like, do you remember the old OKEX clawbacks, which were like every week? There's like every single week, people would go bankrupt. They didn't have an insurance fund. It was constantly empty. Their liquidation engine did not work fast enough. And every week they just claw back profits from profitable traders to fund the bankrupt traders. The sort of like most hilarious one was Bitcoin Gold, which I think had like average weekly callbacks for like 75% of profits.
Jesus.
So you have like these sort of egregious callbacks. There's hundreds of millions of dollars a year of them. And obviously you have like, exchanges that just like could never support their load. And every exchange has load problems. I mean, FTX has load problems sometimes, but like things are so much less bad now. Now it's sort of like if like once a day there's like 5 seconds of lag, it's really frustrating. And a few years ago, it was sort of like, oh yeah, every hour there's like a minute where you can't send orders. And so you have like that, and then you have just managing margin on some of these exchanges is a nightmare because, and for anyone who hasn't used the Chinese exchanges have a lot of advantages actually over, like they do a lot of things right. And they're huge and enormously profitable businesses. They also make some weird choices. And one of the weird choices is there's literally hundreds of separate margin wallets on them, hundreds. And so it's like, you want to trade EOS futures, you have to go buy spot EOS to use as collateral for your EOS futures. Then you want to go short some Ripple futures, you have to go buy some spot Ripple and move into your separate Ripple margin wallet. Then you do like a spot margin trade, that's another margin wallet. You deposit funds, that's in your deposit wallet, which isn't any of these. And you end up managing like 100 wallets to do your trading, and you get liquidated on one of them because, yeah, you had plenty of funds, but they're all in your fucking ETC wallet, which doesn't help your Bitcoin wallet. And so it's like, it's sort of like, if you're trying to like trade a lot of products on them, and you don't have a bot that you've programmed shuffling your collateral around constantly, like you spend half your time doing these weird, wacky spot trades just to have collateral to do the futures trades you're trying to do. And that's sort of like, that's still a pretty frustrating thing, I think, with a lot of exchanges. And it's just like not a good user experience. So we're sort of like using these exchanges. Alameda was active on them, but it was really frustrating. And sort of like the straw that broke the camel's back, so to speak, was, do you remember the Bitcoin Cash to BSV fork?
Yes.
2 years ago. It was a nightmare. All the exchanges had forgotten how to handle forks. And I mean, they sort of like all made different decisions, but one of them, OKX, fucked themselves over. It's sort of a fun story to dive into. It's a long one, but basically they backed themselves into a corner because of bad parameter choices, and ended up deciding that they had no better option than a day before the fork to announce that they're surprise expiring all of the futures in 1 hour instead of on the expiration date, to pre-forked Bitcoin Cash instead of post-forked Bitcoin Cash, expiring it to the futures price instead of the index price, and the futures down limit.
Oh.
So it's like the shittiest expiration you've ever seen, and they took a lot of heat for that, and so that was sort of the point where like, all right, like clearly there's an opening here. Like derivatives exchanges have more than half the volume in crypto, but also they're just not built that well. Like there's just a lot of problems with them, you know? And I that's not like that's not great. Unless you're a derivatives exchange, in which case maybe it is good. That the other ones have the problems. But you know, it sort of seems like, okay, exchanges in crypto make fuck tons of money. Derivatives exchanges are more than half the volume, and they have lots of problems. And like we really understood them. Like we really, really deeply understood the product there. And like honestly, you probably understand that product better than some of the people building these exchanges do, right? Like you use them, and you're like, okay, I understand what's going on here now. I understand what they're doing. I have some design decisions I would do differently. I'm kind of confused about why, like you would probably have some pretty good advice to give some of these venues. And so it sort of felt like, wow, these are like really valuable products, really important central products, and they're not built well, and we understand them. And so basically we just sort of like made a judgment call. And it was the first time in a while that we'd made a judgment call of this sort, which was not like, here's an arbitrage, or like, here's my argument for why this trade is very likely to win, or something like that. It was, I think this trade is likely to lose. Sort of think it's going to fail. But if it wins so much. And if it loses a lot less. And like, I actually think it's very compelling. And the trade in that case was not actually a trade. It was building an exchange. And so, you know, we're sort of like, look, like there's huge upside here. Let's try our hand at it. And so, you know, we started building FTX.
Wow. Well, that's I'm glad you built FTX, because as I said, I love it. I am a derivatives exchange.
Thank you.
A trader myself, and I have got some questions for that when we get to options. But
Yeah.
Let's start with the DeFi first. You know, the DeFi craze has been going insane. It's what everyone's been talking about for the past few months. Give us your opinion. Is DeFi here to stay? And what about DeFi's versus NFTs? What's your opinion on both of those long term?
Yeah. So I think DeFi has a lot of potential, and I think like one way to see this potential, I think like my favorite just anecdote about this is like, you know, you take compounder off and you take any DEX, any on-chain DEX, and you can just glue them together to create margin trading in one click, composing the transactions. Where, you know, you have ETH, you want to get margin long ETH, you send it to the borrow lending, lend it out, borrow USDC, send it back to the DEX, buy more ETH with it. And now you're leveraged long ETH. And you can tie those all in one on-chain transaction, so just one click to do it. And it just works. And that's the key thing here, is that like they're all using the same protocols, they're all on chain, they all talk to each other. So you can just sort of click this button and do it. If someone builds a GUI to do that. And I basically think that's just like really powerful. And if you imagine trying to do that with centralized exchanges, it's a fucking nightmare, because like you hit withdrawal limits, they're like, sorry, not going to send to that exchange. You get liquidated with the funds in flight. You have like weird borrow limits they don't tell you about. It's just like every part of this is like permissioned, which means that when you try and glue a lot of things together, they're not going to play nice. And there's going to be gaps in between all of them, and it's going to take forever to move between them. Whereas on chain, it's literally just all code on chain. It just does exactly what it says it does. And you can just write a wrapper that calls all of them in succession, and you don't need to wait for funds to move, because it's just all in the same, you know, composable ecosystem. And I think that's just like really powerful. Obviously, margin trading itself is not the key product here, because that's something that centralized exchanges have built. But it's sort of like, I think, a huge example of like what power you can get from composability by building things on chain. And sort of the ultimate vision is, what if you had a fuck ton of things on chain that were like really powerful? Then not only do you have each product, but each product has access to each product. And so, you build some app on chain and you're like, shit, like I need payment rails and trading. And like, I don't have that. Like, that's a whole nother business. But you do it on chain, it's like, yeah, okay, whatever. It's just like copy paste the Serum GUI, add it as an iframe to my GUI, and I'm done. Like it's all sitting there for you. And so, you want to add any piece of that in, and you just do it. And all of a sudden, each of these applications built on chain has direct composable native access to each of the other ones. And you sort of get this like quadratic power up of, what can you do by combining any subset of these together? And so, that's sort of like, I think, one of the most compelling parts of DeFi. And I think there's sort of other cool things too, and which look sort of similar. And I think like one example of this is like, if you look at like, what would it take? Let's say that you have a huge audience, right? You're Kanye, and you're like, I want to monetize my like 500 million followers. And I want to have a crypto exchange. That's a cool way, whatever. Right? Like step 2 is like, all right, God, I guess I have to go like try and acquire a crypto exchange or something. So I don't know how to build a crypto exchange.
Right.
Like that's hard. But with a DEX, I don't know, you just like go to the open source repo, copy paste the GUI, change like the logo to your logo, and you're sort of done.
That's it.
And it's like in 10 minutes you can have your own DEX.
Jesus.
And it's like insanely easy. And this is like one of the coolest things, I think. And one thing we did with Serum is by default 20%, well, more than 20% of net fees, because 20% of the taker side gets paid to the GUI host. And so literally just for copy pasting a GUI and tweeting it, you can start generating revenue from anyone who wants to use your DEX. And it takes 10 minutes. I mean, it's just like there are instructions online for doing this. It's all you need to have a server where you can host a website is the only thing you need. And so, or you can just like whatever, use GoDaddy or whatever, and so like, there's a lot of power in the openness of this, and a lot of power in how easy it is to use the pieces that other people have built. And if you do it right, a lot of power to build things and let other people use it, but still win from them using it. And so, that I think is where a lot of the power of, another big piece of the power of DeFi lies. So, okay, I think there's huge potential for it. And I think that like, you could plausibly get like, 50% gains in a lot of businesses and make it twice as easy to launch a startup if a lot of things were on chain. And we haven't even started talking about censorship resistance. And like, the reason a lot of people got into crypto in the first place, right? Like right now, the key thing is we're talking about actual business wins, right? We're talking about things you can go to Visa with and say, look, I'm not trying to convince you that you should tell your shareholders, fuck profits, we're going for censorship resistance, right? You can tell them, look, I'm telling you we can make your product better. And like, that's a compelling pitch to a lot of businesses. Okay, so that's sort of like the thing that really excites me about it. But it's got a lot of problems, and it's really underperformed, I think, on the product side. It's overperformed on the sort of like a mimetic side. People are really excited by it. But it's still the case that like it costs $1 to click a button, and half of transactions fail, and it takes minutes for anything to happen, and no one's using actual order books because those are too expensive. And basically, we haven't moved beyond an AMM plus a borrow lending protocol as like the primitives people actually use in DeFi. And so I think it's like been a bit of a disappointment as far as like the actual ecosystem goes, as far as like what people have actually built. And it's like hilariously underpowered for real business, right? You go to Visa and you're like, hey, would you like to build on chain to like tell me more? And you're like, well, you can probably get about 1 transaction per second, realistically speaking. You're not going to take up more than 10% of the Ethereum network. That would be a lot. It's going to be too expensive. Sort of like, all right, that's 4 orders of magnitude too few. Like, let's discontinue this conversation. It's just like, it's a deal breaker by orders of magnitude. And so, there's a lot of shit that has to get fixed, and a lot of things that have to be built in order for DeFi to start to really realize what its potential could be. And I'm hoping it gets there, but we'll see.
Sounds like it's got a lot of promise. It sounds like we need people like you and some time to get this thing perfected. But that does sound.
That's the hope.
Yeah, sounds like a lot of promise. So now let's get into what I'm mostly excited about, because I am kind of like you, in the sense that I'm from the traditional markets and I've come to crypto, and I've one of the few that have stepped that line, right? When you added stocks and options to FTX, first of all, when you added options, I freaked out. I was one of the guys that was, I was talking about this in like 16, 17. Like, I can't wait till the options market blows up. Like, I promise you guys, it's coming.
This episode is brought to you by PrimeXBT, the exchange that makes possible to trade with leverage on legacy markets from a single Bitcoin-based account.
So first, let's start off with stocks. So let me get this straight. You've got stocks trading on FTX, but in the traditional stock market, stocks, where I am in Texas here, opens at 8:30 and the market closes at 3. But on FTX, these stocks are running 24/7. Is that correct?
Yep, that's right.
And how does that work? Like, how does that work with gaps? Like,
it's a good question. And I almost want to turn the question around and be like, what the fuck, Nizy? Like, I understand why 50 years ago, stock exchanges were only open 30 hours a week or whatever, because what was a stock exchange? Is a bunch of dudes getting together and yelling at each other on a physical trading floor. Right. And so it's like, okay, they need to sleep. No one's trying, like, it. I mean, businesses close at midnight. That's how they work, but now we have the internet, and now businesses don't close at midnight. Like, no business that's technologically based. Like, imagine if you go to Facebook and it's like, sorry, Facebook is closed. It'll be open at 7 a.m., depending on when the first crew gets in. Like, that's not how the world works anymore, for things that aren't like brick and mortar businesses. And to be clear, stock exchanges are not brick and mortar businesses anymore. Like, you go onto one of these trading pits and it's fucking depressing, right? Like, you just walk around, there's like 3 people there. And you walk up to them and like, are you one of those guys who stole my job? You're one of those computer guys, aren't you?
Yeah.
And so as like it all just basically went online, there's sort of this question like, well, why aren't they open 24/7? And the answer is just convention. Like, it's just like they aren't, and in fact, they sort of are. There's like aftermarket trading on some of these exchanges, but everyone sort of agrees it's stupid and no one's going to do it. So then, to some extent, the answer is, how can FTX do it? The answer is, just do it, which is like, don't choose to shut down the market at 4 p.m. Eastern each day. But what's sort of left is like, what does it mean to have a market in Tesla at midnight Eastern time? Because the NYSE is closed, NASDAQ is closed. Like, the sort of like important underlying stock markets are not open. You can still trade Tesla stock on FTX or some other places, but the problem you run into basically is like, all the professionals aren't there. All the people who are normally trading Tesla stock are sleeping. So it's just way less liquid. Like, no one really knows what Tesla's worth at midnight. And at noon Eastern, everyone knows almost exactly what it's worth, because you just like buy a lot or sell a lot at about the market price, right? And it's just like, sort of like, if you disagree with it, sure, go trade. But like, you just quote around market price and it's fine, and you can do an arbitrage if you need to. But at midnight Eastern, it's a totally different story. And so, basically the answer is like, FTX does have 24/7 stock trading. Liquidity does go down when stock markets close, because all the liquidity providers are like confused about what it's worth, and so they sort of like, they get more scared. Like, oh god, if news comes out, I might not know Like I can't just like look at the stock market and see if it's moving because there's no stock market right now. So I think it's like uh, it's sort of like it's there, and it's whatever people make of it, and it could have billions of dollars of volume at midnight. There's nothing wrong with that if people come together to buy and sell. But empirically, it's still the case that the majority of the volume is happening during the liquid hours.
I love that point of view, Sam. Wow, I'd never thought about it like that. And you said, brick and mortar stores back in the day. That's kind of, why they had the structure they had. Why do we have it today? I mean, I love your mind and how you just think outside the box. I mean, that makes perfect fucking sense. Okay, so let's get into options here. So for the past almost 16 years, Sam, this is my wheelhouse. This is where I got really excited when FTX started option trading on crypto, right? Because you have these volatile market, right? And
Yep.
premiums are going everywhere, and I'm over here getting excited. So I jumped on there, and when it first came about, I made a big stink about it, and a lot of people started asking me for advice, because it's a hard learning curve for the average, retailer to get behind options. In my opinion, I think 10 years down the road, now, of course, who am I? I'm nobody, but in my opinion, I think that I'm not sure if leverage trading is going to be around, because in my opinion, there's so many more advantages to options trading. So what I did was I try to educate everyone on options trading, and literally I was one of the promoters trying to get them to FTX. And I got some of my boys from the traditional exchanges, and I said, look at this volatility, bro. Like you guys got to come check this out. And so we went and we tested the exchange out, man. And I must be honest with you, Sam. You are the guy that pioneers and pushes the limits and does these types of things. So I'm going to make a big ask of you, or if you can look into something. So when I evaluate the crypto, all the crypto option exchanges, right? The big two that are out. The big thing that I see that stops my trading is that there's no stop loss orders on options, right? So if I sell a call or sell a put, I have to be there to manually close it, right? And that's fine, but crypto runs 24/7. So imagine selling some calls or selling some puts and then having to go to sleep, and you got these leveraged instruments. So my ask to you is, I know that it ties up a lot of liquidity doing it like this, but Sam, can't you do anything to give us some stop losses on options one day?
Let me actually ask you some questions about that, because that totally makes sense. I totally see why that would be a thing you'd want. And I think the reason why these aren't really standard is that basically the options markets are not very liquid in crypto.
Right.
And what that means is that basically traditionally how stop losses work is you look at the market price and use that to determine whether they trigger. But if the market price is sort of garbage, then you're gonna get stops triggering that people don't want to have triggered. Like, it's gonna be a mess. Like like when I hear that, like my worry is like, oh God, we're gonna have stop losses and we're gonna get 10 complaints today about people. Why the fuck did this trigger? It shouldn't trigger. Like, well, I don't know, surfing a liquid market and like, I don't know what to say. Like that's sort of like,
spread, right?
50% wide. Yeah, I don't know what fair is. Should this have triggered? Who knows? Which doesn't mean that we should give up, but it's just like, that's sort of my worry. And so when I think about this, maybe I'll turn this around to you and say, imagine that there's some liquidity in these options markets, but not a lot. You can't count on the options themselves being liquid.
Right.
And you can't count on low slippage execution during market moves. You can't count on like, I'll have a stop at like $38 and it'll sell, at $37 to $38. So assuming that those are sort of the restrictions on this, then how would you determine whether to trigger them? Would you be looking at mid-market price of options, last traded price? Would you be looking at underlying Bitcoin prices or index prices or implied volatility moves? Or like, what's sort of the thing that you want to be triggering your stop losses?
I'm trying to think about this. I know on the trader's perspective, when I'm trading options on traditional exchanges, I'm looking at the premium price, right? So like for me, when I define risk, I'm saying, okay, if I'm taking in X amount of premium, if I'm losing 2 to 3 times that premium, I want to set my loss.
That's right. And to be clear, I think that's going to work fine for some options. Like if you're buying a 1 week out at the money Bitcoin call, I think that's going to be fine because that's like a relatively liquid option. There's a real price there that you can sort of back out. If you're looking at like 2 days out, 14,000 put right now on Bitcoin, right? Like something just like way out of the money. And really hard to price. Like, is that worth a penny or a dollar or $100? Who the fuck knows? You might see like super liquid markets, and I'd be worried about what the premium is, even like how you tell if the premium fell. So if you're thinking about a super illiquid option, then how would you think about, what would you be looking at to decide whether it should have triggered?
Yeah, I see where you're coming from as far as how to figure this out. I see that it's a complex problem.
Yeah, I think that there's an answer here. Like this shouldn't be an unsolvable problem. I think this is more like I haven't thought hard about this, and like it's not immediately obvious to me what the answer is. And I think a lot of this has to do with how you think about treating these. And are you basically thinking, yeah, Bitcoin went down, so I want to close out of these, and like that's why the options premium went down? Or are you basically thinking of like volatility moved, and that's why my option moved, or what?
So based upon traditional markets, right? They're more so based upon volatility. So I would assume that it would be based upon like we have like the VIX, right, in the traditional markets, and
yep, that's right.
Yeah.
So it could be based on like one thing you could imagine, for instance, is that you compute an estimated fair price for the option based on Black-Scholes or something like that, using the implied volatility of the most liquid options, and the current Bitcoin price, and the time till expiration of the option. And rather than looking at the actual order book for that option, that might be illiquid, you look for, it triggers on the Black-Scholes implied, estimated value of it. I don't know if that would be, estimated fair premium of it. That would be like one thing you could do. I don't know if it's the right thing.
Okay, well, I'll tell you what, Sam. Let me not steal too much time about this options over here, because I say that's my wheelhouse. So I just had to get that out there. But I tell you what, if you can ever figure it out one day, it is my perception that that's the main thing that's keeping true option traders away. And I really believe that if you were the first person to get that out, Sam, that you would steal most of the market, because all of our professional option traders, they have to define their risk, and if you can offer that to them somehow, some fashion in the future, maybe when it's more mature, I think that's the next step there.
That totally makes sense. If you come up with ideas about how you think, or you sort of like think about how you think about this and what would be the natural thing, definitely feel free to reach out, and I'll try and think about it on my side too, and see what the right way to think about this is.
I appreciate that, Sam. So let me ask you this. Let's try and wrap up here. I've really enjoyed this this interview. So now there's going to be people listening here, and there's going to be people that were in your seat, rubbing elbow to elbow at their trade desk at their job, and they might have some visions of that they want to build something or leave their job. Give us some words of wisdom to these entrepreneurs that maybe want to take a risk and pursue their vision. Give us some words of wisdom to those people on the fence there.
Yeah. So like, it's a super interesting question, and it's a lot of this comes down to who you are and what your preferences are. And I think that like what I'd say is that no matter what you do, no matter how you do it, you should think the odds that you completely fail with any particular company you try starting are above 50%, maybe way above 50%, but certainly above 50%.
Right.
And that's okay, but you should be aware of that. And what that means that like when you're thinking about doing this, a question you should definitely ask yourself is what happens if that happens? Is that okay? And I sort of think the answer is yes for a lot of people. And so I don't even mean this as a way to dissuade you. I sort of think it cuts both ways, that like really do think through that. And I think a lot of people who are really scared of starting something might actually sort of think through that and be like, you know what? That's okay. I can go back to Google. Or maybe Google won't take me. I'll apply to Facebook. That's okay. Or, that's okay. I have enough runway to live for a year. If this fails, a year is going to be plenty of time for me to figure out what I'm doing next. Or even like, look, I don't know what the fuck I'm going to do. I don't have any runway. I don't know where I'll go, but like, I sort of trust myself on that. Like I'm resourceful. I happen to be good at getting jobs on little notice. And so if I have to do that again, so be it. And if that's the case, and you're just like, look, life's gonna go on if this fails. And I'm really excited for this, and that's pretty exciting. And don't be so scared of failure. It might happen, and that's okay. On the flip side, if you're sort of like, that would end my life, like I could not tolerate this thing failing, I'm only going to go to a startup if I'm confident it's going to succeed, then you're not going to go to a startup, or you shouldn't go to a startup, because you're not going to be confident. You can't be confident it's going to succeed. You can't even be 50% confident it's going to succeed. I think like by the time you're above 50% it's going to succeed, it's like definitely not a startup anymore. Like then it's sort of like a small business. And so I think like, that's a lot of what I would think about, is just like, can you get yourself comfortable with failure? And with a significant chance of it happening. And I think you often might be able to. And if you can, you should, because it's going to make you a lot more level-headed. When you're doing it, you're going to be a lot less, a lot less likely to try and deny facts because they would put you in an uncomfortable position, if you know you're going to be okay one way or the other. And on the flip side, definitely don't put yourself in a position where you think you're going to be really unhappy and regretful. And so if it's going to be really, really terrible if it fails, and you're not okay with that, don't fucking go to a startup. Like, it's not, you're not going to have fun. No one working with you is going to have fun. No one's going to want you there. You're not going to want to be there, because you're just not going to be happy to be there. You're just going to regret it. So that's like a big thing that I would think about. And after that, I think that I would say, like, how do you decide if there is a compelling opportunity? For one, I don't know, like they're sort of like so different in different ways. And obviously, if they're an answer to this, like, I don't know what VCs would be. That's just sort of like, that's their job, is to like try to figure out the answer to this, but and to gamble over the answer to this, and compete with each other for it. But at the very least, you should be able to tell yourself and your friends a story in which it does fantastically, right? You should be able to say, like, here is the vision for it, in which it goes very well. And some of your friends are going to laugh at it because they're closed-minded, and just ignore them. Like, really don't pay attention to them. It's going to happen. It's going to happen to half your friends. Don't get discouraged by it. That's just how people are. And they're going to say it's ridiculous, and that doesn't matter. But you probably have some people who are into this, who are like more risk-taking, more creative thinking, and you should be able to tell a story where they're like, yeah, okay, that could be really cool. Probably will fail, but like, I could see the world in which that becomes big, right? Like, sometimes I see startups and I'm sort of like, I really don't get what you're doing here. Like, I don't get what your vision is for how your product becomes really big and important. It's sort of like, here's 13 other businesses that are doing what you're doing. They're doing it better. They have better roadmap. They're already halfway done. They're better funded. They have good teams. The whole space isn't that big. Like, it's not like it's $1 trillion pie you're splitting anyway. Like, I just like, am really unexcited about that startup idea. I don't see the upside there. And yeah, I mean, usually it's like, they come back 2 years later, and you start hearing the pivot, the classic pivot.
Mm-hmm.
Never a good sign. So you should be able to excite yourself about what you're doing, and excite the people who you think would be excited about startups in general. And then the other thing that I would say is that, like, outside of having like an idea with potential, there's two things that matter. One is execution, just doing a really good job. If you're on a team that does a really good job at things, that's worth a lot. And if you're on a team that does kind of crappy job at things, that's not going to help. So whatever, obviously this matters, but it does matter, and a lot of people forget this. Like, a lot of people, when they start evaluating startups, like, they forget to check if the team does good jobs at things. It's a little weird. It's kind of true. You see this in crypto a lot. People get really excited over some coin, kind of look at the product, like, the product's crap. There's lots of obviously bad choices. Yes, they have 3 people from Goldman. no one on their team's ever built something well before on their own. Like it's just like
Right.
there's like no evidence that this team is going to do a good job at anything. And then the other thing, which is unbelievably valuable, more valuable than anything else, is like more valuable than anything else I've said, if you can somehow do it, is being in the right place at the right time. That is worth a fucking fortune. And the problem is that you have to know it's the right place at the right time, which generally means before everyone else does. And so sort of by definition, most people aren't there and won't be. But just to like give some anecdotes, like think about crypto businesses started before 2015. Like just take that class of company or protocol or whatever. What's the valuation of the median one of those right now? Like the 50th percentile crypto business founded before 2015.
Oh goodness.
And let's ignore sort of like the person who like has their crypto business where they like buy bitcoins from their friend and sell it to their other friend. Like sort of like businesses that were like ambitious and sort of. I mean, I think the answer is billions, right? Like just like most of them are billions. I mean, you look at the exchanges, Gox is gone. It's basically the only one, right? Like Bitstamp's still there. Bitstamp's probably the second worst of the pre-2015 exchanges, and like that's like a multi-hundred million dollar business, right? Then you get to like Huobi, OKEX, those are billion-dollar businesses. Bitfinex, and Bitfinex fucking lost a third of their customers' funds from a hack, and it's a multi-billion-dollar business, right? And now they sort of made up for that by doing a really good job at their product in a lot of ways. So it's not for free, but like just starting a crypto business in 2013 is an amazing business decision. And it just cured so many ills. You could do a mediocre job of executing, and you could have an uninspired idea and still make $1 billion. Think about tokens that were created like before the bull run, right? There's just like all these tokens that get shit on now because they're like obviously have no roadmap, never had a business plan. They're outclassed in every way by so many tokens. And like, yeah, they're worth 3 billion, and why? Because, they're one of the first 10 cryptocurrencies, that's worth billions, but nothing else matters. And so if you can do that, if you can identify the thing which is going to get huge before other people do, way before other people do, that is just worth ungodly amounts of money. And is the thing you should do above all else. But obviously, most people are wrong about that by definition. Otherwise, most people would already have figured it out.
What's your next big project, Sam? Anything on the pipeline?
Yeah. So there's a bunch of things which are sort of like there's a bunch of FTX features on the pipeline. Sort of not going to dwell on those. There's one which is like moderately big. It should be coming out in the next week or so. And I don't know, it's sort of like the biggest product that we don't have right now, probably. The like most obvious like feature we don't have on FTX. So that'll be pretty cool. But it's not going to be revolutionary. It's just going to be something we should have had a year ago. In terms of sort of like really new things, the biggest things are basically all projects on Serum. And so, there's sort of like, there's a DEX out on Serum. It works. It's on chain. Anyone can use it. And there's a bunch of tooling that's out. But the next big thing is growing the ecosystem, is getting a lot of people building exciting things on it. And, a lot of these are attempts to think about what would have huge potential here. And what that often looks like is real businesses with like fuck tons of customers or ambitious goals or complicated products trying to build on chain, which means that they need Solana. Like can't build on Ethereum. So it's a resource intensive thing usually to run a good business. But second of all, it's not a one-day project. It's sort of like not a food coin. It's like porting a real thing over. And so, it's taken a few months, but there's, maybe 5 or so in the pipeline that I think I'm super excited about, which should be coming out over the next 3 months, I think, interspersed. Some will start coming out in the next week, probably. And I think they're going to like really start adding a lot of punch to the Serum ecosystem. I think some of them are quite well done, and I'm pretty excited about them. And I think some of them are like obvious core building blocks like oracles that are just like not there. Some of them are not things that people are thinking about necessarily, but are very exciting. And so, you know, I think basically like really excited to see those come about. And something I'm sort of like advising a bunch of them, especially on sort of the crypto side. And you know, one thing that I'm thinking about is like how do you scale up some things? And in particular, like, I don't know, I've sort of gone through token listings twice now with FTT and with Serum. And then a bunch of other times that I've sort of advised projects doing it. But you know, really trying to shepherd some of these along, you know, I'm starting to think about like, how do you communicate about, you know, what's probably going to be like 5 tokens I'm really excited about coming out over the next 3 months. How do you communicate correctly to users and customers and traders about this? How do you communicate to exchanges about this? And and you know, sort of this thing where like in my ideal world, they're just like, all right, like 2 for 2 so far on listings that went well. Like, yeah, just keep going until they don't go well, you know, and just like, and just crank them out, right? And I sort of like that. And I think like we try and do things like that with FTX, but I think that's not how most things in the world work. And so, you know, part of what I'm thinking about is like, how do I handle that? And what can I do to make them, you know, as much a successes as possible, and sort of do right by both the projects and by their customers. You know, so that's sort of like one thing that I've been thinking about recently, because it's going to be pretty important for the success, you know, the success of these projects, of their users, and also just of the Serum ecosystem more generally.
You have 2 successful business, FTX and Almeda Research. What are the most important things for you as a leader to lead those teams?
Yeah, part of it is just generic stuff. It's just like doing a good job at actually doing the business. And I think that's like often underrated, is like, if you're sort of trying to run a business, but you don't understand it that well, you couldn't actually do the object level jobs in it, you're gonna fuck up so many ways. Like, you don't know what's going on. You don't know what's important. You don't know how to make judgment calls because they rely on a lot of things that your employees know a lot better than you. And it's just a shit show. And so I think like one thing is just like really, really understanding the business and understanding each part of it as well as is practical. And then once you have that, you know, sort of splits into 2 sort of parallel jobs. And one is this sort of like whack-a-mole of just doing a good job at things. It's just like an iterated game where you make 10 decisions a day and you just get judged on all of them, you know? And it's just like, yeah, I don't know, like here's a product decision. Should you choose A or B? You gotta make the right choice or else you like lose 10%. And it's sort of like, I don't know, often not what people think about in leadership, but it's just like super important. And it's not even necessarily a leadership thing. Like, it's something like anyone can do it, you know, but like the company making good decisions is like really important. And people often like sweep under the rug, like, I don't know, I kind of thought this through and like A seems better than B, so let's do it. And they try and think about like grand narratives, and sometimes the narratives are irrelevant. And just like, I don't know, I did the math, this seems like twice as good as this one, so let's do it. And then the second thing that I would say is like identifying the things that are crucial and will not happen unless you fucking make sure they happen. And like identifying the things where like it's not clear whose job it is. It's like you can have a lot of great employees and no one will do it because diffusion of responsibility. And maybe it requires a lot of context about other areas of the business. So it's kind of cross-team stuff. But that is like worth a lot to get right. Like really important you don't fuck them up. And just understanding like that's your responsibility. You can try and make it someone else's responsibility. That's great. But then if they don't do it, it's not like that is what it is. Like now it's your responsibility again. Like it's your responsibility to make sure that it happens, whether that means delegating it to someone or whatever. But if you delegate it, it's your responsibility to make sure that they follow through. If they don't, then it's your responsibility to delegate to someone else. And you know, ultimately sort of identifying like here are important things for the business that I don't have confidence are going to get done right or get done at all. if I am not personally on top of them, and making sure to see them through, whatever that takes and whatever that means.
And with that, we end our episode. I am extremely happy to have hosted Sam on Point Blank. Thanks for listening. Until next time, peace. This episode was brought to you by PrimeXBT, the exchange where you can trade without KYC on legacy markets with your Bitcoin. You can trade commodities like gold, silver, oil, even indexes and forex. Join now and get a 50% bonus on top of your deposit for trading at u.primexbt.com/Panama.